Peter McGuire, CEO at Exim Australia, now joins us on the phone line. Peter, hi. Very volatile, but we seem to be finding our footing now when it comes to the crude oil prices. Would you say the worst is behind us? Because we are just about a week or 10 days away from the new month expiry. The whole fears that we might be looking at weaker prices, negative prices yet again, seems to have been allayed as of now.
Well, good afternoon, Manisha. I should say good morning. Do I think it's over? No, I don't. I think the vol's going to continue, and I think it's probably going to ramp up over the next matter of days. How deep is the hole? That's the question. Then you look at, as far as the consumption patterns, yeah, you've got some states I was looking at that are, recording a turnaround as far as gasoline consumption, the likes of Florida and Texas. But, the truth of the matter is you've got much contraction frameworks in place. I saw those numbers yesterday, Eurozone PMIs, catastrophic. And then you're looking at what happens tomorrow night, and that's the big number that I think everyone has been waiting on, non-farm payrolls, which certainly changes the whole landscape. Manisha?
Well, absolutely. You're right. Manufacturing numbers across globe have come in on the weaker side. But Peter, would you say that the worst is still behind us, or do you again see the crude prices get into teens and single digit? Are you looking at month of May as a month of consolidation or more volatility?
I think more volatility, and the reasoning is that bad news numbers are starting to leak through to the market, and they're only going to get worse. There's no turnaround and golden bullet. No one's got the golden ticket to, Willy Wonka. This isn't going to turn around in a matter of days or weeks. This is a totally different landscape, and now comes the next part of the journey. What happens as far as those unemployment numbers, and then they start to build. UK releases theirs, then other parts of Asia release theirs, then all different sectors release their manufacturing, and then it really starts to gain momentum. As far as bad news, I feel as though that you will go back to teen numbers, and will it go to single digits? Who knows? Who would have thought we'd go to minus 38 or whatever it was? There's every chance you could see back into the single digits once you get to the expiry of this month. And I think there's enough bad news going to be leaked to market over the next matter of a week or two that really could be that key driver for that to take place.
Peter, how much of importance would you give to China right now? I mean, I know it's not a big number. China accounts for 13 to 14% of the global demand. But with the kind of recovery that we are seeing coming in, at least on that country, how much of that is in prices?
Well, I think there's a degree of it, and they've turned around and they're coming back up as far as from a consumption curve. So their numbers are increasing. They were really hammered in that first quarter. We all understand that. And, towards the latter end of April or mid-April, they've started to really gain a little bit of traction. But whilst that's baked into the numbers, I think they're still incredibly fragile. And we saw those numbers come through as far as Europe, and to a point the GDP coming out of China. I thought that was interesting to say we may not issue any more GDP numbers, Manisha, for China. Yeah. They might just have a scorecard. So that just demonstrates the nervousness as far as, I think, Beijing in a whole. So I think that there's a fair bit of scare out there, and I feel as though that there's going to be worse ahead.
My final question has two parts, Peter. One is about the storages, because we have had the statement from the Indian oil minister as well, saying that the storage in the Indian markets is now full. That is the case with other various consumer countries as well. How do you look at the storages, part one? And second, how do you look at the price range then, as volatile as we are talking about it, but what is the range that you're working with for this month, this quarter?
Okay, first off, inventories, and you're talking about storage capacity, we're not building any new tanks. So that's the great challenge. Where do you store the stuff? So there's no quick solution there. So I think that's only going to create more handbrakes or red lights moving forward. And from a price perspective, you'd have to be saying that for WTI, I'd be erring on the side, still that $16 to $23, $24 number. I know it's a broad range, but when it's up 60% in 9 days, that just demonstrates the huge volatility out there, and I feel as though that's softer from here, not stronger. But volatility to definitely be ramped up over the next 48 hours.